Good morning this Tuesday, the 23rd of January. I'm Grady Wolf, market analyst with Bell Direct. Wall Street opened the new trading week in record territory across two of the three key indices as investors shook off the equity slump that started 2024 lower, especially ahead of the release of key Q4 GDP data out later this week. The Dow Jones rose 0.36% to trade above 38,000 for the first time during the session on Monday, while the S&P 500 added 0.22% to reach a new all-time high, and the Nasdaq added 0.32% on Monday. The strength in US equities signals a strong bull run that has been in effect since October 2022, and the duration of this rally will really depend on whether the US central bank can successfully pull off a soft landing over a recession, as inflation continues to cool in the world's largest economy. Later this week, as I said, Q4 GDP data will be released and will further indicate how well the Federal Reserve's rate policy has been at bringing inflation down while maintaining economic stability. Department store giant Macy's rallied over 3% on Monday after rejecting a $5.8 billion takeover offer, while cost-cutting measures through laying off 16% of the workforce sparked a rally for SolarEdge shares. Over in Europe, markets closed higher in the region to start the new trading week on a positive note as investors await the release of Eurozone consumer confidence data and monetary policy meeting data out later this week. The Stoxx 600 rose 0.78% on Monday. Germany's DAX added 0.77%. The French CAC climbed 0.56%. And in the UK, the FTSE 100 ended the session up 0.35%. The ASX started the new trading week on a very positive note, with the key index closing 0.75% higher on Monday. That was taking strong lead from Wall Street's rally on Friday and driven by the local tech surge on the index. The global tech rally that took over markets in 2023 has extended into the new year as earnings growth on the AI and semiconductor front drives investor appetite for this high-growth sector. The tech sector also benefits from interest rate cuts, which now are on the horizon, as it makes funding growth outlook much more affordable for the high-growth sector. Big miners across a few key commodities were hit hard yesterday for a range of different reasons. Lithium market darling of the past few years, Liontown Resources tanked over 20% yesterday after the company announced it is reviewing its expansion plans and associated ramp-up of the Kathleen Valley lithium project due to weakness in lithium prices. Iron ore miners were sold off amid the declining price of the commodity on growing concerns around China's sluggish and prolonged recovery post-pandemic. Rare earths producer Lynas Rare Earths also fell out of favour with investors yesterday after releasing a December quarter update indicating output more than halved during the 3 months due to a temporary shutdown at its Malaysian facility to complete an upgrade. It was a mixed session across the Asian markets on Monday, with Japan's Nikkei rising 1.62% to close at a near 34-year high as the Bank of Japan monetary policy meeting kicked off, where it is widely expected Japan's central bank will maintain the rate of minus 0.1% for the month ahead. China's CSI 300 index fell 1.56% on Monday, and Hong Kong's Hang Seng ended the day down 2.52%. That was led by real estate stocks after the People's Bank of China maintained the 1- and 5-year loan prime rates despite recent data outlining the uneven nature of China's economic recovery. On the commodities front this morning, oil is trading 2.38% higher at $75.02 a barrel. Gold is down 0.3% at $2,023 an ounce, and iron ore is up 2.71%, having recovered overnight to trade at $132.5 a tonne. One Aussie dollar is buying 66 US cents, 97.44 Japanese yen, 51.89 British pence, and 1 New Zealand dollar and 8 cents. Ahead of the local trading session here in Australia, the SPI futures are expecting the ASX to open Tuesday's session mostly flat despite the rally on Wall Street overnight. And now let's dive into some trading ideas for your consideration today. Bell Potter has decreased the 12-month price target on Lynas Rare Earths from $8.50 to $7.60, however maintain a buy rating on the leading producer of rare earths following the release of the company's first half trading update, outlining production on the weaker side, a slide in revenue and weaker outlook amid China's recovery being sluggish. And Trading Central has identified a bullish signal on Washington H-Sol Pattinson following the formation of a pattern over a period of 124 days, which is roughly the same amount of time the share price may rise from that close of $33.21 to the range of $37.30 to $38.20, according to standard principles of technical analysis. And that's all for this Tuesday morning. Have a terrific day, and as always, happy investing.